Welcome back, cool cats. I want to thank everybody for their well wishes while I was on vacation. And this episode's going to be a little bit different. We're going to do some analysis on SPY, QQQ, IWM, SLV, GLD, crude oil futures, and a special pattern that I've noticed on TLT. But we're going to be doing this in real time because I have not had the chance to do things like I normally would. You're going to get the chance to see how I do analysis in real time. As always, nothing I say is financial advice. Everything here is just my thoughts, opinions, and cats. So we're going to kick things off with QQQ. Remember that this here in purple is the extended support line of this symmetrical triangle, whereas up here in a thicker dark purple, this is actually the lower support line of that multi-year channel that we've covered before. And you can see every time we got up to it, we rejected off of it. We're going to zoom in so that we can tie in key headlines with what was going on with the price action. So not only was QQQ treating that previous support line here as resistance every time we got close to it, but on May 23rd, Trump came out and they proposed a 50% tariff on the EU starting on June 1st. And again, it's interesting how different platforms render out their charts because here on Thinkorswim, QQQ actually broke below the extended support line of that symmetrical triangle, whereas on Moomoo, it shows that it just barely wicked below it and then came back above it, treating it as support. Then over the weekend, Trump came back out again and says that he's pausing the EU tariffs until the original date of July 9th. And then by Tuesday, May 27th, the market was rallying again, treating this as support again, and retested this previous high. Then the following day on Wednesday, May 28th, we had NVIDIA earnings that came out after the bell. And at the same time, the courts ruled that Trump's tariffs were unlawful, allowing QQQ to break back above this previous support line of that multi-year bullish channel just temporarily, until an appeals court upheld the tariffs again and forced us back down below both of these supports. So when I zoom further out on the 4-hour time frame, we can see that obviously QQQ has been struggling with this previous support line of the multi-year bullish channel, but at the same time, it is still making higher highs and higher lows. And if you recall from previous videos, the symmetrical triangle pattern target was roughly 528, so we've actually already exceeded that by about 2 points. And if instead we were taking a measure mood from the big bullish megaphone here with the green resistance line here and the lower support line in blue here that was actually formed by a channel, if that megaphone pattern was in play, then it was targeting roughly around 538, which also lines up perfectly with this key level of around 539. If we zoom even further out, we can see that the all-time high for QQQ was 541.28, and we're just a stone's throw away from that right now. But you know what else we're really close to? We're really close to this exuberance line that I've covered before, which I've covered in previous videos. I got to zoom out on the weekly to even show this, but this goes all the way back to 2008. Every time that we got up to it, it acted as strong resistance. Once we finally broke above it in 2020, when all the money printing happened, that was the level of exuberance. Then we broke back below it again, then back above, and we've kind of been hovering around it. And notice how this price action right here, I know there's a lot of lines in here, but it forced down below that line. So it is a line of demarcation. So there's a very big possibility that the fact that it is lining up right with this previous support line of that bullish channel, if the bulls cannot break through this, there's a very high likelihood that this is going to push down sharply. Even if we get a bigger move up later in the year, this has the potential to act as very, very strong resistance, especially considering how many of these gaps have already been filled to the upside in this V-shaped recovery. And one of my trading buddies has been pointing out that big money has been loading up on a lot of June puts. So unless they're getting out of those positions, they probably know something that we don't. Zooming out on the daily, I'm going to throw up my indicators here in a second. Just at first glance, I do see the RSI forming what almost looks like kind of an ugly head and shoulders pattern. It's yet to confirm, but if it does, we would want to see the RSI probably get somewhere below around 50 to confirm that the overall market, or at least for QQQ, is going to start heading down. And we're going to throw up the moving averages, the Ichimoku cloud, and Bollinger Bands and see where we are relative to all that. So right here are the Bollinger Bands. The upper Bollinger Band right now is around 537. So there is room to run as far as that goes. We closed the week resting on the 10-day simple moving average, but we're pretty far extended above the Ichimoku cloud on the daily time frame. And the baseline of Ichimoku here around 490 often acts as a magnet to pull price back to it. So the confluence of a lot of resistance, as well as the fact that this could be almost like a reversion trade, adds a lot of confluence to this going back down before going back up. With the exception of there being a bullish enough catalyst to break above all of this resistance, and we definitely have been consolidating underneath it, so it's not too far-fetched to think that it could happen, even if it is just a quick look above and fail. And when we zoom out on the weekly, we can see that every time we've touched that previous support line, we've got these very long extended wicks. So it's definitely acting as a dynamic resistance. And we're over the 78.6% retracement. We've almost 100% retraced all of the losses from the initial part of the sell-off. And many are asking, are we going to go on to make new all-time highs, or was this all just a bear market rally? And honestly, I think price action is going to be what dictates that, and it's going to show us where we're going moving forward. And I do want to point out that on the weekly time frame, the beginning of Ichimoku cloud support is around 506, which actually lines up with this key level of around 505. And the market could even come as low as about 497, and we would expect to see a bounce off of that. All right, switching gears, and we're actually going to switch over to SPY. We can see on the weekly time frame, the Ichimoku cloud strong support would be around 573 to 574. And that support actually begins around 584, which if we look left, we can see that right there, that's where the wick comes down to, and it definitely acted as support. On the daily, SPY is also just above its 10-day simple moving average, around 589. The upper Bollinger Band is at around 605, so there's plenty of room to move to the upside, but also plenty of room to move to the downside. Just as I had shared before, I said that the 200 and the 100-day simple moving averages were likely to act as strong support because they were converging, and that's exactly what happened. And on the daily time frame, SPY could come down to the 200-day moving average around 576 to 577, which would also be confluent with this lower support line of this extended channel in yellow and this major support area here. And if it could break that, then Ichimoku cloud support on the daily, the next main level would be around 569 to 570. And of course, we are always keeping this 565 level in mind. It has acted as very strong support and resistance every time it's been touched. Taking those indicators off so that the chart is a little bit clearer, I want to zoom back out again. Remember that this red resistance line right here goes all the way back to 2007, so it's extremely significant. And you can see that every time that it has been touched, it led to major sell-offs. It even led to this bear market right here that occurred between 2021 and 2023. So it definitely holds a lot of significance. And then remember also the RSI pattern, the ascending triangle RSI pattern on the weekly time frame that I shared before. Remember how I said that once we got back up to this previous support line, it would likely act as resistance, and it did, but the market is still bullish, so we may try to retest it again, and I think a lot's going to be determined based on how we react there. If the market is bullish enough to break above this resistance, we could definitely be headed to all-time highs. But if it's not bullish enough, it's going to have to come back down and grab more liquidity. Now, that's not me saying that we're going to make new lows here, although that is possible. But it may lead to a week where the bears are really happy. So on the weekly, previous all-time high was at 613.23. This main red resistance line, if we could come up to it and touch it, would be hitting somewhere about 628 to 630. And I do expect there to be a decent amount of resistance if we do get back up to all-time highs. And zooming in on the 4-hour, there's just a few more things I want to point out. So after we had this symmetrical triangle form, we were obviously bullish. We kept pushing up. And what initially looked like a rising wedge pattern that was going to break down, and it did get a little bit of a breakdown, but it met this main support level here. Turned out that at least on SPY, and we didn't see the same thing on Q, but on SPY we had a channel, a bullish channel this whole time. until recently when we broke that channel. Now, obviously we're still pushing high, but that definitely could indicate a trend shift. But one other thing I am noticing is that if we connect the lows here and here, and if we connect the highs here and here, and for those who have asked, I do include pre-market and post-market price action when I'm doing charting. If we take a measured move from the bottom to the top of the pattern, I'm going to duplicate this line so that we can get upper and lower targets. We're going to drag this over. We're going to arbitrarily say maybe it'll break down from there, and then possibly it will break up from the equivalent area right here. I'm going to have to zoom out a little bit so we can see it. So if this is an ascending triangle, if it breaks to the downside, we could potentially see it targeting basically that 565 level, which again could be a very strong area of liquidity for the bulls. Or, not very strangely, it could be targeting the previous support line of that symmetrical triangle, that extended support line, which is also near to this major resistance level. And it's not a coincidence that patterns always target high areas of liquidity. So frankly, I do think this actually could break up or down depending on the economic numbers and other things that are coming out, which we'll go over near the end of the video. And now this is not financial advice whatsoever, as nothing here is, but as we've been getting closer and closer to the previous all-time high, I've actually been taking some money out of my target date fund and moving it back into the money market fund. And the reason I'm doing that is because if this actually leads to a much deeper correction than what some of the bulls are expecting, I want to have more dry powder on the side so that I can put it back into the market as we start to rally back up. Of course, you got to keep in mind if you're doing something like that and you're wrong and the market just continues to pump higher, then you're making less money as well. Hopping over to IWM on the daily time frame. If you recall, it was breaking out of this bullish megaphone pattern here, and the pattern target is still around 225 to 226. As I've been saying video after video, it has to contend with this supply zone that lives between about 209 up to about 215, and there's even a key level of almost 212 exactly. But IWM small caps has definitely been underperforming the rest of the market, but you could perceive this right here as bullish consolidation before a breakout. So assuming that this resistance doesn't act too strongly, there is the potential that longer dated positions, like longer dated calls, or just buying shares outright, as long as this support level right here around 200 even holds and we break this resistance, we could be headed back up to that 225 level. And markets don't like to leave gaps unfilled, and this right here is definitely a fair value gap. This was just a massive sell-off and it never got retraced. And if I throw up my indicators here on the daily, again, this Ichimoku cloud support is lining up perfectly with that 200 level that I just spoke of. And IWM is trapped between the 10-day and the 21-day simple moving averages. Right above that is the 100 here in blue. And then the 200 is all the way up here at about 216. So as I've been saying, I could see the potential where we build enough liquidity to break through this resistance, through this supply. We hit the 200 and probably reject initially. Then it may come down to that basically 212 level, draw some more liquidity and continue to push up if the market is bullish enough. But it seems obvious to me that these are things that are probably going to play out over the course of multiple weeks. It's not going to happen just in a few days, unless the market has treated this as enough liquidity to finally break in one direction or the other. And who knows what the catalyst may be, whether it's some sort of true social post or some sort of economic catalyst, but there will be a catalyst that causes this to either go up or down in one direction. And as far as patterns go, I'm not seeing anything as clear as what we saw on SPY. Obviously, there is a lot of consolidation going here. What I do notice though, we had obvious bullish divergence here on the RSI, where the RSI was making very obvious higher lows, whereas price on the chart itself was making very obvious lower lows. But it's a little bit harder to spot, but I'm also seeing some hidden bullish divergence over here, where the RSI made a slightly lower low, but price on the chart made just a little bit of a lower low. And I'll try to show you what I mean if you can't see it visually. If we try to drag this down here It won't let me drag it down to the RSI, but you can definitely see that this line is not as slanted down as far as the actual RSI. So what that's telling me is that IWM is likely to bounce from here, followed by another move down. And that's why I'm expecting it to likely grab more liquidity from that 200 area before trying to push higher. If you're liking this format so far, where I'm kind of doing it on the fly rather than coming in fully prepared, please let me know in the comments below, and I may try to do it this way more often. And while you're already down there, if you wouldn't care, please like, share, and subscribe with notifications so you won't miss any of these market moving insights. All right, hopping over to TLT. Now this one I did prepare a little bit beforehand. I just want to zoom way out on the weekly to remind everybody what each of these different trend lines is. So we had a very bearish channel here in light blue that TLT broke below, and every time we hit this blue line, it actually acted as very strong resistance. We zoom in a little bit, we had another trend line here in lavender, same thing. Every time that we hit it, it acted as very strong resistance. If we got back above it, it acted as support. And right now, look where we are. We are right below it. We'll zoom in now on the daily. We can see right here in light green, we had another bearish channel. Notice a trend here. TLT just tends to stay pretty bearish. And I think that may be why a lot of people expect it to rally, because everything that's in a bear trend, usually eventually you have short squeezes, and they're very aggressive short squeezes to the upside, which gives a lot of hope to the bulls until you hit major resistance and then you start selling off again. We can see right here on February 21st, we broke above that channel resistance, consolidated for a little bit, tried to break out, and then pushed back down. Then once we hit that previous resistance line, it acted as support. Now, if you haven't noticed it yet, I've already drawn it in, but there's what appears to be a falling wedge here on TLT. And I'm going to zoom in on the 4-hour time frame just so you can see exactly where I got all of my highs and lows for that pattern. But right now, TLT is consolidating right around that main trend line in lavender, as well as the upper resistance line of the pattern in purple, right around 86 even. If this major consolidation pattern, which that's essentially what wedges are, if this breaks out to the upside, it could be targeting, and this depends on where it breaks out from, but it could be targeting roughly about 95 up to 96, which, as we see, would also be targeting basically the previous support line of that major bearish channel that I showed you. But you have to keep in mind that wedge patterns can break out in either direction. So we're going to duplicate this measured move, and we're going to drag it down, and we're going to see if it were to break to the downside, where could TLT be headed? This is indicating that if it breaks to the downside instead of to the upside, TLT could head to a new low. The previous all-time low was all the way back in 2004. It was at 80.51. And this pattern is indicating that we could go as low as about 73 if it breaks to the downside. Now, me personally, because falling wedges almost play out like probably about 80% of the time to the upside, I am leaning more towards TLT heading back up and touching this major support line of that big bearish channel. But I don't know what would be bullish enough of a catalyst to actually break back up into that channel. So I think it's very likely that it will act as resistance. So the highest that TLT could get would probably be about 95 and then start to push back down again. And frankly, if we do get up there, I'm going to be looking, at least in my retirement portfolio, to move some of my longer term bond fund either into short-term treasuries or back into a money market fund. Because unfortunately, there are just so many fundamental reasons for long-term yields to continue to increase rather than to decrease. Hopping over to Bitcoin, we've got a lot going on. I'm going to zoom on out to the weekly time frame so you can see what I'm talking about. We had this previous bullish channel here in orange with the lower support line here and the upper resistance line here. And if we come over here and we zoom in a little bit, we can see that although we broke above that previous resistance line a few times and formed essentially a new channel here in purple, Once price broke back below the previous resistance line and it came back up, it's now treating it as resistance again. And this little white shaded box right here is a supply and or demand zone, depending on whether or not you're above or below it. So without any really clear patterns, all that I can go off of is key support and resistance areas. So right now, obviously this roughly 109 to 111,000 area is acting as supply. If Bitcoin were to come back down, there's a potential it could retest the convergence of these two support lines somewhere around 77 to 78,000. However, if it wanted to push up, instead what it could do is it could go up and it could even touch as high as about 133 to 134,000, depending on where it hit within this channel here in purple. Now, if I pull up the RSI on the weekly time frame, we can see some pretty obvious hidden bullish divergence here, where essentially the RSI made a double bottom, but price made a higher low. So similarly to what I always say is what this indicates to me is that Bitcoin was likely to push higher and then be followed by another move down to gather more liquidity. And if we look at the upper peaks, we can see bearish divergence here where the RSI has made a lower high, whereas price here has made an equal high. So all of this combined leads me to think that Bitcoin could try to push a little bit higher, maybe even tagging the upper resistance line of this previous bullish channel around 115 to 116,000, possibly even as high as about 120,000, and then come back down and try to gather more liquidity. All right, we're hopping over to crude oil futures. This is something that I mentioned I'm going to continue to cover because it's just this massive pattern is so important. As I shared last time, we had this inverted head and shoulders pattern, which did play out. It got almost exactly to the target, but couldn't break back above that previous support line of the much, much larger pattern that I've been sharing. As you can see, this thing lasts for multiple months. And if you missed it before, this thing is actually targeting crude oil futures of roughly about 2.5 to 3 per barrel, which is just absolutely insane. Again, I keep my charts on log scale, so that's why it looks a little bit wonky if you're curious. But if this were to play out to the downside, this would actually be breaking the COVID low of 650. Let's zoom back in on the weekly a little bit. We can see every time we try to touch this previous support line, it does seem to be acting as resistance. But also, as I shared, and I'm zooming back in on the daily, there appears to be what appears to be kind of a inverted head and shoulders pattern, where we are forming bullish divergence here. And as I've shared in previous videos, we're kind of stair-stepping our way up with these double bottoms. And if we're using this previous support line as the neckline, we take a measured move from the head up here. We can see if this can actually break back above, then we could see crude oil futures coming back up to roughly about 74. And somebody asked me, what would it take for me to think that all of this price action right here was just a false breakdown of this much larger pattern? For me, it would be if we could break back above the resistance line of the pattern, ideally pull back and retest it and it act as support. As we can see previously here, we broke above it. We wicked above it essentially for a few days, but that was still a lot of resistance and it forced it back down. And we came back up, we couldn't even get to touching it again, and it acted as strong resistance. We had this massive sell-off. So if we could push back above it and then treat it as support and it continue to push higher, especially if it were to break this high of around 80.66 to 81, that would lead me to think that this is potentially a false breakdown. Otherwise, this rally back up could just be essentially a bear market rally, and then we could continue heading back lower. Switching over to Exxon Mobil, which is kind of related. This is a ticker that I've had a leaps strangle position on because of just how wide of a range this potentially could go. As you can see, as similar to crude oil futures, all of this has gone on for multiple months because this is on the weekly time frame. And the thing I want you to notice here is we had this big sell-off, and then we were inside of this pretty well-defined channel here in purple, which is very well defined when we zoom in on the 4-hour time frame. You can see very distinct lows and highs. But if we treat this as one giant bear flag, that indicates that ExxonMobil could be headed back down. If we take a measured move from essentially where we broke down from to about the midway point, and we drag it over to where we're actually breaking down, this is indicating that over the next few weeks, ExxonMobil could be headed down to about 89, which would obviously break this previous low of around 96. And zooming back out on a weekly, over the course of roughly a year, because that's the conservative pattern target based on how long this took to consolidate, this is indicating that ExxonMobil could go as low as about $74. And if any of you have any thoughts and opinions on what could send oil or oil companies so low in such a relatively short amount of time, please leave that in the comments below. I'd love to see what you think. I've had multiple people ask me to look into GLD, so we're going to do that. So we can see that for many, many years, it was trapped below this supply zone right here that lasted between about 177 up to about 197. And there was this very distinct trend line, this descending trend line here that's dashed in light blue that it could not break above until February of 2024 when we had this massive breakout, another period of consolidation, and then another push higher. As more and more price action developed, we could see that this was actually going up inside of a very well-defined bullish channel, and there was even a minor bullish channel inside of the major bullish channel, whose lower support line even acted as resistance when we broke out of the major bullish channel. So I'm zooming in on the 4-hour time frame. One of the things I want to point out is this descending resistance line here in purple, where each time that we've touched it, it's acted as major resistance. However, GLD is actually still above the previous resistance line of that major bullish channel, and right here between about 288 up to about 295 is a major demand zone. It was a supply zone before we finally broke above it, but every time we've come down and touched it now, it's acted as demand. So essentially what this is forming is a consolidation pattern, and if we connect the lows here, we can see that it's even potentially forming a symmetrical triangle pattern. And as you know, those can either break up or down. Given how much gold has rallied, there's the potential that it is going to correct and it's going to come back down. But also, given a lot of the geopolitical uncertainty, that could be enough of a catalyst to push it up as well. So I'm going to zoom back out on the daily so we can see it clearly. I took a measured move here from the top to the bottom of the pattern, and we're going to duplicate that so we can see what the upper and potential lower bounds are. So let's drag this over to here and let's see. These are just tentative targets. We never know exactly where something is going to break out or down from. But we can see that potentially GLD, when it breaks out of this consolidation pattern, could be targeting somewhere around 355 or as low as around 253, maybe to 255. If the breakout actually occurs a little bit further on, which is actually what I'm expecting based on where these areas of liquidity are, lo and behold, look what would happen. If we broke to the downside, it would be hitting this very, very major level of roughly 258, which could act as very strong support. And alternatively, if it breaks out to the upside, it could be targeting the previous resistance line of this extended minor bullish channel somewhere around 355, give or take, which could also act as strong resistance. So this is definitely targeting key areas of liquidity. And my guess is if you're a long-term holder anyway, you'll probably be happy wherever this goes to. If it comes down, you'd be looking to buy more, and if it comes up to resistance, you could sell what you already have. Deleverage a little bit, and then when it comes back down, buy more. It's been a while since I've covered it, but SLV has this massive symmetrical triangle pattern on the monthly time frame. I mean, this spans multiple years. It goes all the way back to 2008, and then it hit this major high here in 2011, and it's been bouncing around for multiple years. Well, assuming that this right here isn't just all some false breakout, then SLV over the course of multiple years is targeting around $62 to $63. One thing that I've noticed about precious metals is they tend to fall inside of channels. As we can see right here in orange, ever since September of 2022, it's been trading within this channel. It broke above that previous resistance line and it's been trading above it. Now that said, there is the potential that SLV could come all the way back down and test the previous support line of this channel, which could be around 24 to 25, depending on where it got hit. Now, this is way zoomed in on the 2-hour time frame. This is a very small pattern, but even this symmetrical triangle is indicating that depending on where it breaks out, SLV is likely headed up to about 31, which is going to be touching this previous supply zone, or it could be targeting down around 28.90, which again pushes it in this demand zone that goes between about 28.80 up to about 29.20. Ultimately, though, I think if you're a long-term hodler, buying it at any point right now, if this major pattern actually does play out and it really does go over $60 per share, you could be looking at more than doubling what you actually own right now. And at least historically, a lot of times SLV will lag gold, but eventually it plays catch up, and when it does it pretty aggressively. Hopping over to Dixie, the dollar strength index on the daily time frame. Right now we've got a lot of consolidation that's going on, and I want you to remember this very bearish channel that it's been inside of, that it broke below, now it's back inside of, and it's trying to break that resistance line, which would now be somewhere around 100 even. A few weeks back, I shared this inverted head and shoulders pattern with the neckline here in purple, and I shared that it was targeting somewhere around 101.50 to 101.60. After we got this back test, we finally got the breakout. It hit this previous resistance line, which acted as resistance, but just briefly pierced above it, came back down, retested it again, and it forced it all the way back down to the previous neckline. This is why I always extend my trend lines, because they can very much act as support and resistance even days and weeks into the future. And I want you to notice we keep hitting this resistance line and it keeps acting as resistance. But each time that we do, it seems to be selling off less and less. And this right here is bullish divergence. So there's the potential that Dixie is trying to stage a breakout from this previous major bearish channel. But zooming out on the daily, as I've said before, there is a supply zone that goes between around 99.50 up to around 102. And we're definitely contending with that. There's a very strong trend line here in yellow and green. I've covered those in previous videos. I could absolutely see Dixie still coming down to try to grab liquidity from those levels around 97 even. And if it hits that level, I would expect a very aggressive bounce to the upside. And if we haven't already broken through the supply by then, we will probably break it then. But if Dixie ever breaks this main support line in green, it could spell major, major trouble globally. If we look out on the weekly with our indicators thrown up, we can see that the 10-day simple moving average here lined up perfectly with that previous resistance line and acted as very strong resistance, as evidenced by the wick of this candle. And that's what makes me think that Dixie is headed back down. And I have to wonder, since the market has been selling off with Dixie and rising with Dixie, will the market sell off with Dixie again as it heads back down to this major, major support line? And if it does, and if this acts as major support, will we then see the market rally again? And zooming in on the daily, I mean, Dixie is just a stone's throw away from this 97 area. So it wouldn't be too surprising to me to see it come down to grab that major liquidity and then try to push higher. But as I've shared multiple times before, and I'm zoomed back out on the monthly time frame, we have this major resistance line in red, this major support line in green. It forms essentially a symmetrical triangle. So even if Dixie bounces at this roughly 97 area, about the highest it could go before hitting that resistance line would be about 114. And we would expect over the next few years for Dixie's strength to go back and forth between this resistance and this support until one or the other breaks. And based on the angle of support, I'm actually expecting this to break to the downside, not to the upside. Dollar hegemony cannot last forever. I'm going to just briefly touch on the VIX because I know a lot of you are interested in it. Remember this massive falling wedge pattern that led to the big breakout that we had over the past few months. that hit all the way up to 60. And remember where this main red resistance line is. We zoom in on the 4-hour, we had this very obvious descending triangle pattern that led to that major breakout. And we've came back down. We are now below that main red resistance line, but we are forming bullish consolidation here, which for the market bulls, this is not a good sign. Look how we've had multiple progressive higher lows on the RSI, whereas the VIX has not made as high of a low. It's definitely contending with this major resistance line, but if this acts as a consolidation, and if roughly about 17 to 1750 holds a support, if we break back above this main resistance line, this could potentially take us much higher. And if it did, I would expect to see the VIX hit at least around 25, and it could hit this previous resistance line here in green, depending on where it got hit, somewhere between 25 to 28. One of the things you really want to look for is look how quickly the RSI gets overbought or oversold. Obviously, this was a big move down on the VIX. It went from about 2020 all the way down to about 1865. But the RSI also got into an oversold position that quickly, meaning that there was a lot of resistance to the downside, which tells me that there is the potential that fear is going to begin ramping up again. On the flip side, as I've said before, I see this roughly 15 to 1550 area as major support on the VIX. Now, if we were to get down there, I would absolutely expect a strong bounce, with the exception of if they, like they've been doing, if they gap it below it. All right, we're hopping over to NVIDIA. If you haven't seen these patterns before, I've covered them in previous videos. And we had a very obvious rising wedge pattern here where we've actually already overshot that pattern target to the downside. This was targeting roughly about $97 a share for NVIDIA. We got as low as about 86. But also, as I've covered before, I shared that there was an RSI falling wedge, and I said that once we broke this resistance line of that, NVIDIA was likely to be very bullish. And we can see how we just briefly pierced below the support line and then got really bullish, pierced up here, and then kept pushing. But the thing about RSI patterns is that they target a measured move in strength, not a measured move in price. So as you can see, NVIDIA is already getting closer to this key 70 level of what many consider an overbought level. So there's definitely more room to push to the upside. But the question is, how much? There's a lot going on geopolitically, and obviously Trump is trying to limit the kind of chips that China can get. We want to say if we were bullish enough to break the previous all-time high of 153.13, the next major areas of resistance would be this previous support line and this major resistance line. Depending on where it got hit, we could potentially see NVIDIA come up to even like $200 a share before meeting major resistance, which, as you may or may not know, pre-adjusted for the split, that would be over $2,000 a share and put NVIDIA well over a market cap of $3 trillion. Now, I've said it before and I'll say it again. Until NVIDIA starts to sell off, I think that this whole AI bubble continues to push up, regardless of bearish catalysts. Now, looking at investing.com's economic calendar, on Monday, we've got S&P Global's manufacturing PMI, as well as ISM's manufacturing PMI and prices. And Jay Powell is going to be speaking at 1 p.m. And then much later in the day, Japan is having its bond auction. Then on Tuesday, we have the JOLTS job openings coming out and multiple Fed members speaking. On Wednesday, we've got ADP non-farm employment coming out at 8:15 in the morning. And then S&P Global Services PMI for May. Then also ISM non-manufacturing PMI and prices. And then again, much later in the day, we have Japan coming out with a 30-year bond auction. And considering what's been going on with Japan's bond market, I think that these bond auctions could have significance on the overall markets. And I'd like to thank some of my trading buddies just for pointing these things out as well. On Thursday, we've got initial jobless claims coming out, as well as the Fed's balance sheet is going to be released. And on Friday, we've got average hourly earnings month over month and non-farm payrolls, as well as the unemployment rate. And considering how much recession fears we have right now, I do think that the payrolls numbers, that the jobs numbers, and the earnings numbers are going to continue to have a bigger effect on the markets than they may have previously. Then hopping over to Moomoo's earnings calendar, there's not a lot coming out on Monday, but on Tuesday we do have CrowdStrike coming out with earnings after the bell. And Dollar General is also projected to have earnings, so that could give us a good idea of what's going on in the general economy. Then on Wednesday, before the bell, Dollar Tree also has earnings, and Five and Below is doing earnings after the bell. Same thing, we want to see not just what the earnings are, but what the forward guidance is from these retail stores. Then on Thursday, after the bell, we've got Broadcom posting earnings, as well as Lululemon, and we really want to see what the earnings are like for Broadcom, as well as their forward guidance. And this could definitely affect tech. There's really nothing going on Friday, nothing major. Please stick around for today's trading rule to live by. I want to say best of luck, cool cats. Thank you so much for the well wishes on vacation, and God bless.